What's up everyone, welcome to Stockton. It's a pleasure to meet all of you. On this channel, we talk about stocks before they start blowing up, say goodbye to chasing stocks at all-time highs, and say hello to making some money. So if this sounds like something you want to take advantage of, then hit that beautiful subscribe button and like the video. Now let's get to it. Before we get into the video, I have to say that I'm not a financial advisor. Anything I say is just my opinion and is for entertainment purposes only. Having said that, if I'm talking about a company, I'll let you know whether I'm personally going to invest in it or not towards the end of the video. But you should always do your own due diligence, so with that out of the way, let's get started.
Hi guys, so today I want to address some Tellurian news and what this means for us as investors. Tellurian terminates total agreement on Louisiana Driftwood LNG plant. Tellurian Inc. said on Monday it terminated a stock and LNG purchase agreement with France's Total Energies SC related to Tellurian's proposed Driftwood LNG export plant in Louisiana. So in the first instance, one is likely to view this as very bad news, but it really isn't. Firstly, this was something that was expected to happen and therefore was already baked into the current share price. And as you can see, the market did not react in a negative way at all. We actually closed 0.91% up in the green today, which is indicative of what I've just said. In the past, Tellurian wanted partners like Total Energies to invest in its Driftwood project, which will include a liquefaction plant, pipelines and natural gas production. The partners were to receive LNG from the project. But as we know, Tellurian changed their business model in the last couple of months. Tellurian actually signed 10-year agreements to sell 3 million tons per annum of LNG with commodity traders Vitol and Gunvor Group. Analysts covering the stock had already picked this up because they were saying how Tellurian now needs to choose between the old business model, which relies on partners, or a new model in which the company sells LNG to buyers like Vitol and Gunvor. So Tellurian basically just confirmed what we already knew by officially terminating the Total agreement. Total was an early speculator in TEL before the virus happened. COVID has impacted everything globally with few exceptions and has also impacted the LNG landscape. Charif Souki saw a new opportunity in this new LNG landscape, which required a different strategy. So the old agreement with Total was just outdated and it wasn't aligned with the new vision of Tellurian Inc. TEL is doing very well and is on track. Total, should they elect to do so, is free to pursue new terms with TEL, terms that would be similar to the deals being made with other third parties. One step at a time. First, let's exit the old agreements before we start renegotiating new ones. I'm not saying that Total will do so, I'm only saying that you should not be surprised if they do decide to enter the picture later on. Deals like these are often renegotiated. Sometimes contracts can be modified when changes are small and are still aligned at the core. Other times it is best to completely exit one contract and start a new contract. Let's see what happens going forward, but in short, nothing bad is happening here. It was simply a movement to relax both parties. So to sum things up, relax guys, this was already baked in. I'm still long and strong with Tellurian stock. Again, this is just my opinion. I'm not a financial advisor, nor am I a specialist in this field. So please always do your own due diligence. Anyways guys, that's it for today's video. Have an awesome day and I'll see you in the next one.